McCullough, and welcome back. I still have some energy here. We're going to do the hat trick, the third in a row, and we're going to take it up 10,000 feet to talk about some subject matter in biotech and healthcare that is well above the rocks in my head, at least my pay grade. A guy that I've known for a long time, successful hedge fund manager at Millennium. He runs Critical Mass over there, and that's Mike Taylor. Mike T, thank you for making the time. This is a real pleasure. We probably have this discussion on our own, but instead we get to have it out loud in front of everybody else. So thanks for making the time.
Yeah, it's truly my pleasure. Thanks a lot.
Yeah, we go back. You and I go back a long ways. I mean, I think the first time you sent me an email, first of all, it was a long time ago when we started Hedgeye, and you said you're kind of like a troglodyte, and I'm like, what? Like what?
Yes.
And I guess you're comparing
we
me.
have so much in common then.
Yeah, like I mean, have I gotten any better? I mean, I think like most things in my life, I start from a pretty low point.
You've graduated.
Yeah, well, well, thank you for that.
Homo erectus, maybe.
Yeah. Well, we go back a lot, and I want to go back and forth on a lot of different things in terms of how an actual hedge fund manager has to deal with this kind of volatility. But first, having a point of view, obviously you have a point of view from your sector's perspective, your expertise is in healthcare, and wanted to get just your top-down view of COVID-19 and what at least what you're thinking right now.
Sure. Well, I'm kind of in a strange, unique situation where I spent most of my scientific career actually working with virus, developing gene therapeutics about 20 years ago. And the virology community consists of like 25 people in total, not a very famous sort of thing to study. Anyway, when I saw this break out in January, I really didn't think much of it because it's a coronavirus, and coronavirus we've seen in humans forever. It's a mild cold, and that's about it. But as soon as China shut down 5 cities, that's when it caught my interest, and that something is very, very wrong, because this is like no other coronavirus. And then we had to look at it and say, oh, it's animal derived from some super bat, and it jumped to humans, and then they shut down 5 cities. Well, what that meant was that this is very, very likely man-made, unfortunately. And the probability of a virus going from animal to human and being highly transmissible is the equivalent of you solving the Rubik's Cube in the dark with no hands. And that's about it. Like literally 1 in 10 billion. And that's why if you look through the history of infection in humans, we don't have any cases of a severe, highly transmissible virus coming from an animal and sweeping through the human community like this. We just don't have anything like that on record. And there's a reason why. It doesn't occur naturally.
Now, once you came to that realization, what did you do? Like, I mean, you were early, I assume.
I was early, and it was one of those moments when I was thinking, how can I possibly be right and nobody sees this? And most of the guys, even in my scientific community, didn't. And it's just because nobody works with virus. Mm-hmm. Very few people do. And that's when I started shorting retail. Mm-hmm. And that's what I did. I shorted retail and kept my favorite longs on, and I reconstructed an entirely new book saying, well, where does this go? I did not imagine it would go this quickly the way that it did, but the impact is gigantic and long-lasting, and it is going to be hard to get rid of this virus. Very difficult.
Well, when you and maybe just a couple more points on that. When you first come to realization, obviously in our profession, it can be a gem or it can be being early is called being wrong.
Yeah.
But then you get into being right, and that's where people make a lot of money. Of course, is if you're right for the right reasons. Now, how would discussions go? You're a collegial guy. You're not afraid to voice your opinion and share your thoughts. Like how surprised were colleagues or other PMs that you talked to about your view on this?
That's a great question. I told my closest guys, it's about 15, 20 PMs I'm closest with. About half of them I've trained and now are running healthcare money out in the New York City greater area. And I told them what I thought was happening and going to happen. And I got a bit of pushback, of course, but then they could see that this is where it's going to go. I'm actually quite happy to say that all of my guys are up on the gear. And hopefully I was able to help them get to that spot. So, but so far as everyone else, I shut up. And I actually regret that I did it. I did not warn friends, family, only professionally I spoke of it, because I didn't want to be that, the guy that's screaming from the mountaintop and just trying to scare everybody and be sensationalist. And that was...
Well, we of course, I have to take that, full on every day, where people are like, you're trying to scare people and, take advantage of the virus. And it's like, no, we're actually trying to protect people's hard-earned net wealth, which there's another channel that is astutely focused on pumping up the other side of it. So, like when you go through it from here, like, do you think people are too amped up about V-shaped recoveries or the bottoms being in? And I mean, I know you have an opinion on the market broadly, so let's just start with that, and then we'll get into healthcare, biotech, and stocks.
Well, we could talk about a little, it really ties into what happens with Corona, or the Chinese virus 19. And we have about 500,000 infected right now in the US. This is going to abate over the next 3 to 4 weeks, and it must abate over the next 3 to 4 weeks, because we have to have, because of the CARES Jobs Act, everyone has to have all their employees back on by June 30th. And so that means the lockdown has to be done sometime in May, so you can get everyone back on and employed. How many more, we don't know, will actually become employed. So what that sets us up for, though, is the next wave of reinfection. At the end of that time, the end of May or so, we're probably going to have 30 to 50,000 people walking around that are rather asymptomatic through the country, reinfecting everybody. If you step back and you say, well, what did the US start with in January? Probably 30 to 50 people infected, and that morphed into a pandemic. So here we'll be starting with a baseline of 30 to 50,000 infected. So once the lockdown comes off, it's highly probable that within 6 to 8 weeks, we will have a rampant problem again.
How do you think about that Hobbesian problem of, and this is to a degree a political question or explicitly a political question, Trump trying to turn the economy on, and of course, the expense there being lives, and then and not doing that being political probabilities changing come the election.
Exactly. This is an election year. And so the most important thing in Trump's mind is the stock market. So he needs everybody to get back to work and for the news cycle to change into something else. But this is going to be really difficult to beat that. So I really don't know what they're going to do. I assume he has to let people go back to work. And I believe that 6 to 8 weeks later, so at the end of July, we're going to have another problem on our hands. And they'll try to coin it as regional or something like that. It's a New York problem, it's a Boston problem. We'll do kind of shutdowns here and there. But chances are it's actually going to be everywhere now, because we've dispersed the virus throughout the country. So it's going to be weird places like Lexington, Kentucky or something.
Yeah, well, I mean, it might even make it to Thunder Bay, Ontario, for real. This is the way that it goes. No, quite seriously. I mean, I'm in Westport, Connecticut, which you know, but I mean that's obviously was an early hotspot. But now it's Stamford, Connecticut, which is where my office is and where I'm speaking from today. So I mean, it obviously it has that path. And I wonder, like when you say it comes back, like the second wave, like did you say July? Or because some people are just like, well, it would come back in the fall.
Yes, that's what the narrative is now. But remember, the narrative is really to serve the White House. The reality of the math of it is that it's going to be 6 to 8 weeks.
Yeah.
So if you take the R naught is a mechanism of transmission, meaning that it's a measurement of transmission. People say 3 to 4 R naught, meaning each individual will infect 3 to 4 new people during the course of their disease. if you take it down to say a 2.5 or 2.6 with quarantine efforts and wearing masks and things like that, you're still going to infect 2.5 people for each person infected. So you can do the math from there, starting with 30 to 50,000 infected. It turns into a big number very quickly.
Yeah.
And
Okay.
that's really the key to the math behind it. You put people into areas again without face masks on the subway, at the urinal, you're going to be transmitting disease or this infection.
Yep.
And it's going to be a problem very quickly.
So when you have that view, and I know this is the hardest thing for at least the two of us, and probably for a lot of other people, is to maintain the opposing thoughts of your intermediate term outlook, which is, I'd qualify that as intermediate term as opposed to the today. What is happening at a hedge fund today? What's happening?
Yes.
What is the V bottom off the low today? Yes. I know that
Let me tell
doesn't
you,
bother you, Mike.
As
but
you know, making money and being right are two different things.
Yeah.
Okay? I am 75% net long. It is probably the first time you've ever heard that coming off of my lips.
Actually, yeah, I have not heard that kind of length.
And there's good reason for it, because they're going to do their darndest to jack up assets. Now, when does the rubber hit the road, right? When quarantine comes off. So the trade is long to the end of quarantine, which I believe will probably be the second week in May, third week in May, something like that. And then you have to watch for signals, though, okay? A big signal today was JP Morgan. JP Morgan didn't reserve enough, and everyone called them on it. And so you're up 2%, you're down 2%, and they're all selling off. It's very hard for this market to actually go up with banks not participating. So watch for the signals that give you a tell. The next tell will probably be what Microsoft says on the call. It's trading at a high now. It's up on the year. It's the biggest name in the benchmark, and they have an incredible amount of exposure to business, small businesses, even every business. The number of businesses that are going to shut down in the U.S. and worldwide is, in my view, going to be astonishing, and it can't not hurt Microsoft. Microsoft is trading at 26 times forward.
Now,
watch for that. Stop.
I think that's a real important thing that veterans of long-short equity trading do. It's not just looking for catalysts in terms of economic catalysts, in this case COVID catalysts, presidential pump or not when it came to the oil market last week, but actually paying attention to the generals of the market and understanding that they are indeed catalysts themselves. Now, on that front, that might seem odd for somebody to hear that from a healthcare guy, so to speak, or a healthcare PM. Why the hell would you be watching Microsoft? I mean, how long did it take in your career for you to just be open-minded and objective and understand that while you could be bearish on one longer-term duration, that you need to be bullish on another duration? I have a hard time actually explaining this to people sometimes.
Oh, well, it takes time and survival bias, meaning that all the people that didn't figure it out didn't get to sit in my chair. And that's really it. So it's just, look, this will be my third recession of my career, 2000, 2008, and this one. Each one is totally different. I said 5-6 years ago, the next bubble will be a corporate credit bubble because the Fed has inflated, they've run out of stuff to inflate. So now it's corporate debt. And the Fed has an incredible, difficult time fixing and saving corporate credit problems. And we've seen that through history.
Yeah.
Meaning that they have to nationalize company problems. And we're seeing it in the airlines. We're going to see it in the banks. But in this case, it's all the restaurants, every restaurant, retailers. I expect to see a third of all restaurants and retailers gone by year end.
Now, can you go through that component of how you think about COVID? The longer term, or I don't know if you want to call them structural, but certainly behavioral factors at the consumption level in this economy.
Sure. I mean, well, if you just take a look at social distancing in itself. How does an airplane work with social distancing? How does a restaurant work with social distancing? A good friend of mine said, look, Mike, it's going to be okay. This is a big energy PM who runs, I won't say who it is, but it's a big energy PM who runs his own fund. And he said, we're just going to wear masks and everything's going to be fine. I said, really? You're going to wear a mask while you're eating in a restaurant? And he said, oh, yeah. Okay.
That sounds
Maybe
deep.
we'll get takeout. So that's really what we're looking at here. Is it sounds great on paper until you really think through the operations of how do I survive this?
Yeah.
How do you ration the number of people that walk into Macy's? Because you can't make it too crowded, right? So it's, there has to be 6 feet or 8 feet between each person. So you're going to only allowing so many people in the store. I mean, heck, a lot of these companies are struggling just to make the ends meet before this happened. I look at it as that there's no way. Casinos, hotels, same thing. It's all the same thing. 100 kids in the pool at the Hyatt.
Mm-hmm.
You're going to do? You can't. So they're going to have to change their behavior, and either the rack rate's going to have to go up to $1,000 a night with 30% capacity occupied, or none of them are going to make it.
Yeah, I run into this problem quite frequently. I've been doing it for, I guess, 22 years. And you talk to a portfolio manager on Wall Street, particularly certain hedge fund managers. They have a lot of answers to a lot of different things, but sometimes when it gets down to some of the most basic behavioral things, it's almost jaw-dropping how people have certain assumptions. Now, what is it about our business in that regard? Is it a lack of having never run a company, just having shitty common sense, no street smarts? I don't know. It's like that. What you just said about a mask in a restaurant. I mean, you don't need to be master of the hedge fund universe to come up with that conclusion.
Well, as you know, everybody's wealth and personal well-being, especially in my business, is tied to value of assets, and that's it. They must have these things go up or else it doesn't work. I mean, look at your vanilla manager, meaning a manager who runs mutual fund money, active manager, and they can only be long. They've seen probably 10% drop in the number of seats every year. Mm-hmm. So you started out with 100 people running money, 10 years ago, and now you're probably down to 32. So they're completely tied to the value of assets going up in a shrinking business to begin with. So they all have to be bullish, epically bullish, terminally bullish.
Terminally.
It's their job.
Epically, terminally.
Yeah.
I mean, we're all fantastically getting good with adjectives. I can't imagine why. But the question about that too, and I had this question really back in February. I remember meeting with you and your team, maybe just before that. And it's actually, I don't know if it's a lost art or it's just an unprofitable business, but the whole idea of a hedge fund manager actually being properly bearish at the right time and executing on the short side, to me, is almost an extinct species.
Oh, yes, absolutely. And I mean, honestly, all the bears are dead. Nobody who is bearish has a job anymore. I was one of the few guys that did go 20, 30% net short, and there's just about none that did it and survived doing it. So, but it was also a huge contributor to my performance over time. That's what made the difference between a guy that puts up 5-6% a year and 21% a year for a decade.
Mm-hmm. Now, what do you think about that? I mean, at the end of the day, we have a lot of machine-based, rules-based, systematic trading. Do you think that the last Jedi survives in short selling, or do you think it's just once again over because the Fed said so?
Well, you know how it is in the hedge fund business. Everybody dies eventually. That's it.
That's true.
And you just don't know when your number is up. I was fortunate where I had a very, very long run of doing that without fail. But really that too is just a numbers game. Look at our good friend David Einhorn, a brilliant guy who's had a rough run over the past several years because his style does not work right now. And maybe it's because of the Fed, maybe he's just on tilt. And I don't mean to pick out a certain individual. He is a brilliant guy, and I have the highest respect for him. But his numbers are not very good right now. And it might just be that you just have to keep reinventing yourself and say, I'm a value guy today, I'm a short seller tomorrow, I'm a Ed Hyman Uber bull market tomorrow and the day after. But next Thursday, I'm going to cash. And you just have to constantly reinvent yourself in order to survive doing this.
Yeah.
And if anything that I did, it was just that, where you just have to be aware that whatever you're doing right now, hopefully is the right thing for today and tomorrow, maybe the month. But I'm going to have to reinvent myself and be completely different in order to figure out the combination of events to trade this market for the next trade. So that's what I wanted to share with you and what I think is going to happen. It's quite a bit out of consensus, and I'm getting an incredible amount of pushback from my peers, which usually means I'm onto something.
Yeah, I mean, the pushback is as surreal on the downside as it is on the squeeze. I mean, guys, you can show CFTC futures and options contract positioning as of last week. This is the biggest move to the net short side of what is essentially everybody's hedge, which is the S&P 500, going almost all the way back, certainly back 3 years. So we're showing you there a 1 year Z-score, and against looking back the last 3 years on the min and the max of that net short positioning. So obviously this came out of somewhere. So when you're saying to people, hey, look, I'm going net long, I actually did it on Wednesday, and I felt a little weird doing it last Wednesday.
Yeah.
But that was really only a function of covering all my shorts and buying a couple things.
That's right.
But I mean, it's you definitely, I had a lot of that pushback, like, oh my God, we're still in an era, and again, I think and I want to know if you agree or disagree, where since bears have been extinct, and I can't quite understand why, like it's given birth, bears on growth has given, birth to the greatest bull market in recent memory in treasuries in particular, and certainly in gold. Maybe not going back to 2011, but pretty good rival for that at this point. That's just being bearish on growth. But the whole idea of being an actual, gnarling, thrashing bear, I mean stock market bear, I don't see a lot of it out there because I don't see anybody that can actually trade all the moves. You got to get bullish a lot of the time. In fact, if you're only covering your shorts, isn't that the way to think about this?
Well, Keith, your model and the product that you have is like no other on the street. And I have to applaud you for building it. I mean, you've honestly done God's service at a price. And I appreciate it greatly. And it truly is unique. And I think it's changed everything. Your model is going to kill it over the next 6 months. Just crush it, because there is going to be meaningful longs and shorts throughout the space. The Fed has, with their liquidity, has enabled us to have our long, good ideas work, and in the very short term, awful ideas go to zero.
Mm-hmm. Well, what I love...
That's all that I want to hear. I mean, look, I can't wait for Carnival Cruise Line's call and what they're going to say. Hey, we think things will be great in 2022, and the good news is that we have 8 months of cash.
Mm-hmm. Yeah.
So they're not going to make it. And Macy's and GPS and Nordstrom and Cake and I want to pull up my Bloomberg so I can go to my list of zeros here.
Yeah. Well, I mean, people talk about, like, to use an example of zeros, like, I mean, it makes people almost apoplectic to basically hear Cheesecake Factory, to name one that you just rattled off, say we can't pay our rent, we don't have cash, and that was actually the low for the stock. I mean, it's only gone up since. But people that don't know how to short sell, they don't get that. So my plight right now, or my problem, is I have this like growing audience, and I'm quite thankful for it and feel blessed. But I mean, I have a growing audience of people, never mind underperforming hedge fund managers that don't know how to short stocks. I got people out there that are like totally sideways on just not comprehending that stuff goes down into the news and then bounces V-bottom off the news. So I guess you've given them a timeline for that, which is, again, we get through.
Absolutely. As soon as the quarantine comes off, that's when the rubber hits the road, and everybody has to show them what they got.
Yeah.
So the river card comes, and everybody shows their cards. Everyone has the bets on the table. You see the bets; they're huge.
Yeah.
And then you find out that attendance at hotels, retail sales. I mean, think about how screwed retail is right now. They just bought for a gigantic spring season that doesn't exist. So they have to unload everything at 20 cents on the dollar, if they're lucky. And with that cash flow, they're going to have to raise enough money to buy for 4Q. I mean, we literally have companies that are not going to be able to buy, don't have the working capital for their biggest season, which will be 4Q.
Yeah, working capital, credit, all the just classic late cycle workouts that take quite some time. That's certainly what we'll be focused on.
I think we're at the eye of the storm right here, Keith.
Yeah.
And the Fed made it the eye of the storm. The next threat is when the rubber hits the road and we all have to show our numbers and talk about what our plan is. And I fear that we'll be doing that right into rising virus counts at the end of July Actually, it'll happen throughout the July. Now, the good news is that we're going to be able to see it every single day. And I suppose is the good news for us investors, a terrible news for this White House.
Now, how about, and we'll take your questions, I'll go to questions after I ask you this one, Mike, but so please
Sure.
fire your questions into the queue and they'll be voted on as usual. But on the long side, healthcare's got a bid. There's a lot of different ideas that people have out there in terms of ways to play it. Do you have any?
I do for your listeners, and it's actually a really easy one. It's an HMO, a health maintenance organization called Humana. Humana is one of the largest. Humana has almost entirely its subscriber base for their service is Medicare. And Medicare folks aren't losing their jobs. De facto, it's mostly government paid. And this is a $46 billion market cap company trading at 15 times forward. And this quarter and every quarter throughout the year, they're going to bone crush numbers because utilization in the hospitals, hips, knees, elbows, are down at least 50% right now. So they're going to crush numbers by at least what I think is 30%. I have them earning, hold on, I'll pull it up right now with my trusty Bloomberg. I'm not sponsoring Bloomberg. There we go. So they're going to do 18 bucks in earnings this year. It's actually going to be closer to 25.
Wow.
And so what they're going to have to do is that, I guess the second leg to that is they're going to have to hide it because they can't tell the government, oh my God, we're crushing numbers. Thank you so much. The government will lash out. So they're going to stick as much as they can of that into reserves to hide it. We're going to put it away for future periods where our costs will go up. So they're going to end up crushing numbers for the next 2 years as they slowly let out their reserves. So it is trading at 15 times. It should probably trade at 18, 19 times on earnings that are 20 to 40% higher than now.
Interesting. An insider just bought stock too. That's cool. Yeah, you're not seeing a lot of that. Right?
Oh, look, it's going to be one of the very few names that is going to absolutely crush numbers throughout the year.
Well, I think, and thanks for that idea. I appreciate that. You could actually see that, and that's still, and my last question before I take other people's questions is about this as well, which you can see the ghost of the prior stock market bubble in just terms of people's propensity to believe winners in the new environment. So, whether it's, I don't know what the hell they're thinking with Tesla today, but in terms of, for me, it's a bullish breakout on my trend signal, so that's pretty straightforward. But, Netflix or Peloton or whatever the heck it is that they're telling themselves stories about today, which, by the way, do have some fundamental realities that are bullish. But what is it about that? Like, is that the way that a bear market ends? Is that people go straight back to telling them stories about bull market stocks?
I've been trying to think through why we've seen so many of these story stocks, space, Peloton, Tesla, have this incredible power behind them. And I actually believe it's entirely because of Robinhood and the like. A friend of mine showed me how you could sign up on Robinhood, deposit the account, money into the account immediately, and be trading within an hour. So the friction to get retail money, $5,000, $10,000, plowed into calls in Tesla or whatever, has basically vanished.
Right.
You don't have to see a human. You don't have to sign a piece of paper. It just instantly can go in. You can borrow against your credit card, stick it into this account, and start trading. And I think that the younger generation has done exactly that. And so that's why we've seen such a move in these story stocks.
Yeah, it's and I think you've heard me say this, I'm sure, but it's a new dawn for not just millennials, but for me. I don't run a hedge fund anymore, but I get to trade for free.
It's free.
There's no friction. There's no cost.
No friction whatsoever.
So if you're a degenerate trader like me, or I used to be, and I still actually have brought back those tendencies, which you probably believe, it's free. I don't know how people aren't interested in that. The odds of winning in stocks are much higher than a casino if you're using the right sources.
Absolutely, if you're using Hedgeye.
Yeah, well, thank you. I appreciate that. Yeah, it is an amazing time on that basis. All right, let's just get into some questions. And you certainly perked people's interest here with the man-made comment. So from Courtney, if the virus is man-made, does that mean a vaccine would be easier to engineer?
No, it's going to be the same difficulty. I believe we just learned a lot about Johnson & Johnson's vaccine this morning. If you were on the call, they're using a vector that I'm very familiar with and a cell line that I'm very familiar with. In fact, I worked with both of these things in developing gene therapy drugs 20 years ago, exactly these same things. So Johnny John has a really good shot at developing a vaccine, and by the look of it, what I just got from my sources just a few minutes ago on the Bloomberg here, they told me about the supply that they'll have, and it looks like they will be able to supply the U.S. in a pretty short period of time if the vaccine works. And there are always issues with vaccines. You may be sensitizing yourself for something that happens to look like something that's very similar in your body. So you may have an autoimmune reaction to those vaccines. So there is danger with this. And we see that often with vaccines. We see problems coming up. Now, there are like 25 different vaccines being tested now. And chances are only a handful of them will make it. But hopefully that'll be enough. Now, so far as supply, that's going to take a bit longer. I don't expect to see supply available to the masses until the back half of 21. And it'll be all the way through 21. This will be going on through 22 and 23.
Interesting. There are a lot of opinions on that. I mean, like some people, actually different PMs, just to tell it like it is, I've had discussions with many in the last many weeks now. They're starting to add up. It's like Groundhog Day here at Hedgeye. But I'm just pacing up and down in the office having these conversations with different portfolio managers, and you probably wouldn't be surprised, but the gamut of opinions on a vaccine, the cure could change everything. Everything's back to all-time highs. To know actually you need something on prevention, and you need to have biometrics, and you need the whole world's got to have that to feel confident to behave the way that you'd like them to behave in that environment. So I don't know. I mean, I just listen. But what I could say is that there's a great divide in terms of opinions on how this plays out.
Well, one of the best proxies to look at is like flu vaccine, for instance. Flu vaccine, it's taken us 30 years to build the capacity to serve the world. 30 years.
Yeah.
Now, the manufacturing hopefully will be a bit easier for this, but there's many, many different forms of how we're developing this vaccine. Johnson & Johnson, for instance, is making it in a cell line called Percy-6, which is a very difficult cell line to use. But the yields from that, all that they have to do is stick one teeny tiny drop of this into you to vaccinate. So they may be able to build enough supply. Whereas Moderna, ticker mRNA, is using our messenger RNA vehicle, which is also a teeny teeny little bit as a vaccine. So they'll have no problem making supply for that.
Yep.
But there'll be others that will have it'll be very difficult to make supply. So, and honestly, we don't know what the yields look like for Johnson & Johnson yet. And they don't know either, because they haven't even made it yet. They've said they have, but they haven't. They have a lot of concepts on a piece of paper.
How about Gilead? That's a name that gets, that one actually hits the top of the charts on just kind of, if you're screening for memes or word threads, that one generally hits the top of my daily charts in terms of speculation.
I know Gilead very well. I've made my early career on Gilead in 2000, 2001. Gilead's drug is basically designed to slow down the virus once you are infected. And we saw some data from this recently. It looks like that it's probably modestly effective. But because it's an IV drug, it's probably not going to be used widely. And frankly, we don't have any controlled data. So honestly, we don't know what it really looks like. It may do very, very little.
Yeah.
And that's the unfortunate part of the data that we have. It's all single arm.
Okay, thanks for that. Good thing I still have 9 minutes left on the clock here, Mike, for this question, because this just shot to the top. If this is proven to be weaponized, do you anticipate an escalation of China world hostilities, and how would you position yourself for that?
Well, I believe that this has already been weaponized. And this is exactly what it looks like. Now, I think it was an accidental escape of this virus from Wuhan, the BSL-4 laboratory. It makes perfect sense. They were working on viruses like this there, and chances are it escaped in a purification process, meaning that they had to clean the tools or the test tubes, and maybe an autoclave broke, and nobody's looking. You put it in the bag and throw it out in the trash. And that's it. And that's probably how it broke out. And this may be only one of the viruses that escaped from there. We just see it because it happened to be the most transmissible in humans. There might have been 15 vials of different viruses that have escaped from there. We just wouldn't see it unless it was really transmissible from human to human. This may have been going on for years of viruses escaping out of there. They just weren't very transmissible between humans.
Now, I don't think there is an irony in Trump actually taking up that that rhetoric on Wuhan yesterday. I could be wrong, but he did have a commercial or something of the ilk to show how he's managed it appropriately and blame them for it. Is that something that you would expect to see an escalation ahead of the election, given the political opportunity?
I would, absolutely. I mean, anything to deflect the damage that's been done and place blame. That's how politics works.
Yeah.
But there is a lot of blame to lay there. Look, this is a country that has a over $10 billion business of harvesting live human organs from unwilling donors. And this is, nobody talks about it, but it's true. You can dial a lung. They have a phone number right here. I'll call it up, oh, this is great. I can get a new lung. That's what China's like.
That is disgusting.
So it's no law, there are no rules, there's no enforcement. It's a thug economy.
Yeah, well, I mean, because there is obviously, back to that Hobbesian point of the trade-off of opening up versus the ultimate probabilities rising and falling of re-election. But again, why not just join hands and everyone blames China? Is that ultimately? Is that going to change anything? I mean, it was only 6 months ago where Trump singing "Kumbaya" with the Chinese on trade war resolution was the next phase. I guess I can't even remember what phase we were in, but it was a phase.
Look, China has paid off every university, every speaker, they have their hands on everything. I mean, think about the great interest of all corporates where China growth is a major feature of their long-term guidance. Penetration into the public and turning them into consumers and getting their iPhone sales or whatever. They're a very, very important part to the growth of just about every international company. And China's made their markets available if you play by our rules. And our rules are whatever the hell we say. Tesla's part of that too.
Well, that's an interesting link between Tesla and the Chinese. I don't want to go off on that. We only have a certain amount of minutes left here.
I want to talk about the receivables, huh?
Well, I mean, we do have, and I know you follow all of this because, being a pro at your level, you have to have the entire mosaic of global macro, not just to be a great long-short stock picker in healthcare or otherwise for that matter. So we have had two major Chinese frauds, public companies, in the last 2 weeks. Or 3 weeks, whenever Luckin was in the educational company last week, $33 billion company, and it's not even, it's kind of glazed over as whatever.
Well, China actually has a new rule that just came out last night. They said no more frauds. Discovered.
Oh, good. Great.
No more discovered frauds.
No more.
And that's it. And that's what they can do, and that's what they do. But as your last speaker said, this will only last for so long. Mm-hmm. And so long may be coming to a theater near you very soon. So
lovely.
It's a very difficult spot that they're in.
A couple more questions here before we run out the clock. And this has to do with your view of it coming back.
Yes.
I know you don't have a precise probability but that's the question. What is the probability of you being right on that, of COVID coming back?
Well, it's actually math, so it's really easy. You just take your classic transmission model, which is the same thing that everyone's been using, and you can plug in an R naught value of 2.5, 2.6, what have you, and a starting population of 30 to 50,000. And what does that look like 5, 6, 7 weeks later? and it looks like 1 million people. And that's really the math of it. So you have to make an assumption. And I think the assumption is right, that we'll have 30 to 50,000 people with modest colds. And the whole problem with China-19 is that if you have mild symptoms, you have a cough, a runny nose, little fever, but you're okay. So you're not going to think that you actually have the China-19 virus. So you're not going to go to the doctor to get tested, because why would you want to go to the doctor? You might catch COVID-19 at the doctors. So don't go to the doctors. That's what they're going to think. That's what they're going to do. So the mild patients, I believe, are going to be spreading this around unless we have some form of mandatory testing where they show up at your home knowing that you have a cold and start testing you now or there.
Yeah.
So, and that's why I think that the chance of this coming back is very, very high, and that we're going to have repeated outbursts of this.
Mm-hmm. Now, we've seen stories on this lately, because it too is math. And thanks for the concise answer on that, because sometimes it's just the math. But this question from Bob, food supply chain starting to come under attack. Like, is that the next phase of it too when it comes back? Is that you don't trust what it is that you're eating, or where it came from, by the way?
Wow. I have not thought that far. But you know me, I don't trust anything. So, no.
Well, even in our internal weekly call at Hedgeye with our employees, that's a question. Like, people wonder, well, why is it not safe to go to the restaurant, but it's okay to have Johnny come deliver it after Eddie made it or Nancy made it? I mean, there's some pretty logical questions with no answers.
You should see me accept my food for delivery. I have a bunch of squirt bottles of isopropyl rubbing alcohol, 75% diluted. So you got to have a little water in there so it still works. Okay, you can't use pure alcohol. And I take the bag from the guy and I spray down the whole bag, everything. So yes, I've been having a little alcohol with my Chinese food as of late.
Yeah, I bet.
That's what we have to do, because you really don't know who's been touching it, coughing on your food. I mean, you can't track that. And I don't blame restaurants for having some sick people in there making food, because these people need to eat too. Restaurants are having a really hard time. Most of these restaurants are family run.
Yeah.
So it's very, very difficult to control what goes on in that kitchen.
Mm-hmm.
Because we can't see it.
Right. No.
So,
exactly. Now,
so I'm not out to eat. I'm hosting barbecues. That's it.
My barbecue, I just cleaned it, actually. That's how much COVID's affected me. For a Canadian to actually clean his barbecue, I mean, I did it this weekend. It was disgusting, but I actually did it. So I'm going to have some barbecues too. Last question. This is,
Sure.
The old adage, I don't know if it's not even an adage, it's just a fact. Before Goldman came public, the old Marcus Goldman question, and the question partners would ask themselves, could you make money alone in a dark room? And I wonder, if you could not only just comment on how difficult it actually is to be working by yourself, even though you're working with your teammates, you're not physically alongside them. Can you, Mike Taylor, make money without anybody else in the room? And how do you think about that?
Having other people in the room certainly helps.
Yeah.
Having my web of contacts and people that I can bounce ideas off of, it helps. And hopefully I can help them. And I think I do, to help them all think critically. And because it's easy to convince yourself into something, and you forget that there's another side to every investment story, long or short. Because for every short I have on, there's somebody who thinks it's the greatest idea on earth. So I have to be really cognizant of it. But over time, it's only time that tells if you're a successful or not unsuccessful investor. And part to that success is never quitting. Mm-hmm. You only quit when they take the money away.
But it really is, it hardens you, I think. I mean, and having traded through 9/11, I think you did so successfully. It hardens you, moments like this. It really shows you, and not just yourself, but it shows you who has not been hardened. And maybe that's another question. You do mentor a lot of different up and coming PMs. It's a great role that you have, and they're fortunate to have you as a teacher. I don't even know how to ask, but I mean, what is it that gets them all when they get hammered for the first time in P&L terms?
Oh, yeah. Okay, that's a great question. What does it look like? Well, the most important thing for all of my guys to understand is that when they look around the room and they look at all the other teams doing exactly what you're doing, you have to get in the back of your head that within 7 years, 90% of these people will not be here. So just remember that. And what makes them fail over and over and over is that they dig their heels in and they want to be right more than they want to make money. Stop being right. Make money instead. You'll never get the bottom. You'll never get the top. You get the middle. And after you get it, you take a victory lap. You pat yourself on the shoulder and you say, I don't know if this is the top, but I just made my nut and I have to walk and move on to the next thing. Even though I might be a freaking genius and it'll go up another 300%, I don't know the answer to that. I have to risk manage myself out. Those are the hardest things that PMs have to deal with.
Mm-hmm. At the highest level, because obviously you're at that level. So thank you very much. That's an awesome way to end it. That's a great lesson. And
It was my pleasure. Good luck out there, and I'm extremely happy that you're doing great work.
Well, thank you. Thank you for the kind compliments. And again, I'm just some version of a troglodyte. Don't you forget that.
The best version.
He's Mike Taylor. I'm Keith McCullough. I hope you sincerely enjoyed that. There is indeed a lot of experience and wisdom at the hedge fund level right there that you heard. That finishes today. We'll be back tomorrow, and then we'll do it the day after that. I appreciate your audience, and I'll see you tomorrow.